You spend months carefully building your credit score. Then one day you check it and it dropped 40 points overnight. No missed payments, no new debt, just gone. Meanwhile, you've been doing everything right for 6 months and it's barely moved. If this sounds familiar, you're not doing anything wrong. Your credit score is designed to react fast to bad news and slow to good news. Today, I'm going to explain exactly why that happens, what causes the biggest drops, and the fastest, legitimate ways to rebuild. Your credit score is calculated by 5 factors, but they don't all move at the same speed. The factors that can change your score almost overnight are payment history and credit utilization. Together, they make up 65% of your score, and both can swing dramatically in a very short time. Hard inquiries happen the moment you apply for any new credit, a card, a loan, a car. The lender pulls your credit report and your score typically drops 5 to 10 points immediately. That drop shows up within days and stays on your report for 2 years, though the impact fades after about 12 months. A missed payment is the most damaging single event. One payment that's 30 days late can drop your score 50 to 100 points depending on where you started. Someone with a 780 score can lose more points from one late payment than someone with a 600 score. Because the higher your score, the more you have to lose, and that missed payment stays on your report for 7 years. A maxed out credit card can drop your score significantly with one billing cycle. If your credit limit is $1,000 and you charge $900, your utilization is 90%. High utilization signals financial stress to the scoring model, and your score reacts immediately when that balance gets reported to the bureaus, which typically happens at the end of each billing cycle. A collection account appearing on your report from an unpaid medical bill, a gym membership, a utility can drop your score 50 to 100 points and stays for 7 years. Closing an old credit card drops your score in 2 ways simultaneously. It reduces your total available credit, which raises your utilization ratio, and it shortens your average credit history length. Both happen immediately when the account closes. Building credit is slow for a simple reason. The scoring model is looking for a pattern of behavior over time, not a single good decision. One on-time payment doesn't prove reliability. 24 consecutive on-time payments does. Here's the realistic timeline for positive actions. On-time payments. Each one helps, but the impact accumulates slowly. You typically need 6 months of consistent on-time payments before you see meaningful improvement from this factor alone. Paying down a credit card balance. This one actually moves faster than most people expect. If you pay down a card from 80% utilization to under 10%, you could see your score jump 20 to 50 points within one billing cycle once the new balance gets reported. This is one of the fastest legitimate score improvements available. A new credit card account. Paradoxically, opening a new card initially lowers your score slightly due to the hard inquiry and the new account lowering your average credit age. But within 6 to 12 months of responsible use, it starts helping more than it hurts. Length of credit history. This is the slowest moving factor of all. It literally just requires time. The longer your accounts have been open and in good standing, the better. There's no shortcut here. Recovering from a missed payment. This is where people get the most frustrated. A single 30-day late payment can take 12 to 24 months of perfect behavior to fully recover from. The mark itself stays on your report for 7 years, but its impact on your score diminishes significantly after about 2 years if everything else is positive. The fastest, legitimate ways to rebuild. Move 1. Pay down your balances immediately. If you have any credit cards carrying a balance, getting your utilization below 10% is the single fastest score improvement available. It shows up within one billing cycle, usually 30 to 45 days. If you can only do one thing, do this. Move 2. Set autopay on everything. Every account, every card. Set it to pay the minimum at bare minimum so nothing ever goes 30 days late again. You can always pay more manually, but autopay is your safety net, so one forgotten bill can never torpedo your score. Move 3. Become an authorized user on someone else's account. If you have a family member or close friend with a long-standing credit card in good standing, ask them to add you as an authorized user. Their entire history on that card gets added to your report immediately. You don't even need to use the card. This can add years of positive history to your profile overnight. Move 4. Don't apply for anything new. Every application is a hard inquiry. Every hard inquiry drops your score slightly. When you're actively rebuilding, stop applying for things you don't need. Give your existing accounts time to do their work. Move 5. Check your credit report for errors. Go to annualcreditreport.com, the only federally authorized free report site. Pull all 3 bureaus, Experian, Equifax, and TransUnion. Look for accounts that aren't yours, payments marked late that weren't, balances reported incorrectly. Dispute errors directly with the bureau online. An error being removed can raise your score significantly and quickly. Here's what most people can expect if they start all 5 moves today. 30 to 45 days, score improvement from paying down balances reflects on your report. 3 months, consistent on-time payments start showing a meaningful pattern. 6 months, most people implementing all 5 moves see 40 to 80 point improvement from where they started. 12 months, significant recovery even from serious negative events like a single missed payment. 24 months, full recovery from most negative marks, with the mark still on your report but having minimal scoring impact. The timeline isn't fast, but it's predictable. Do the right things consistently and your score will reflect it. To recap, your score drops fast because payment history and utilization react immediately to negative events. It builds slowly because the scoring model is looking for a sustained pattern of responsible behavior over time, not a single good decision. The fastest moves to rebuild: pay down your balances to under 10% utilization, set autopay on everything, become an authorized user if possible, stop applying for new credit, and check your report for errors at annualcreditreport.com. That link is in the description below, along with a link to the best starter credit cards if you're building from scratch. If this helped you, subscribe. New video every week, personal finance in plain words. See you in the next one.